Good morning, everyone. It is Wednesday, September 25th, and the stock market continues to go up and to the right. We are at an all-time high with the S&P, a really positive market when you look at the last 5 years, when you look at this year, 2024, when you look at the last 2 years. It's just a very good market. There's no if and buts about it. Uh, Stock portfolios are going up and to the right. Those who are investing and holding over the long term are expanding their wealth. They're bringing retirement closer. They can retire early. They are making their lifestyle as they look to retire that much better. If you're looking to invest and buy into a house or something, you have more to work with. All those things are positive, very positive. I will take it. This year, I'm looking at very good gains already. We're not even done with September, and it's a good year. I am thinking about how I can get a little defensive. And good morning, Tomas. Thank you so much for subscribing. I really appreciate it. It's great to have somebody in Argentina. And do me a favor, and somehow, if you can go on and get me your email address, I'd appreciate that. But thanks for joining this morning. Shadow Guy, good morning. Yeah, it is good to see the member list growing. And better yet, I'd love to see everybody continue to expand their portfolios and make money on Wall Street. So as we look at the year, right, the S&P year to date is up almost 21%. And if you look at the last couple of years, it's up really nicely. I mean, over the last 2 years, the S&P is up 60%. That's incredible. That is awesome. But along the way, there is, times when stocks have sold off. 2 years ago, they sold off by 25%. And more recently, they have sold off quite a bit here in the month of July, going into August, I believe. The S&P sold off by 8.5%. So we've had a couple of mini, corrections on the S&P. I know the NASDAQ did officially get into correction territory. It went down more than 10%. So I'm, happy with the gains on stocks. Most definitely. There's some stocks in my portfolio that I don't want to touch. The number of shares that I own, good companies, and those include Meta, Alphabet, Uber. Those stocks, PayPal's in there. I'm going to keep those stocks. I think they're going to do well going forward. They're going to do well over the next 5 years. But I'd really like to look at my portfolio and see if there's one or two stocks that I'm not as confident in, and maybe I could reduce my holding in that particular, stock. I'll be doing some of that because a couple of reasons. One, we're getting towards the end of the year, and I like to measure performance of my portfolio at the end of every month and at the end of every year. That way I cleanly look at, okay, how much money did I make in 2023? How does it compare to other, factors like another index like S&P or NASDAQ? How am I doing with my bond portfolio? How is it doing, right? So all that performance, it really is something I've been doing for many years, and I want to keep at it because that way I could continue to learn and get better. And as I approach toward the end of the year, I'm not alone. I think a lot of investors think about it this way. I'd like to just take out a couple of stocks that I'm not as confident in and put that into cash. And potentially that'll go into stocks once we see some type of correction, or I find a company that I'm really excited about, or I just add shares to the stocks that I really have the most confidence in. So that's where we're at with the stock market. Again, it's not bad news that stocks are doing so great. It's great news. But, as investors, I think we have to think about the next 2 years. And that's, the job is never done because we're always thinking ahead. It's good to sit back and kind of look and go, okay, great. Uh, Stocks have gone up. I've made money. I've realized some gains this year. Looks good. Now's the time to maybe adjust the portfolio a little bit. Start thinking about taxes, right? In the US, we pay taxes based on an annual return and what you realized as a gain or a loss. All those options I've been selling, those are all short term gains. Dividends, ordinary income. So the stocks that I've sold, some of them are taxable. So that's where you got to start harvesting some losses. I don't have a lot of losses to harvest. So that'll have to be a factor as I adjust my portfolio. And maybe we can continue to talk about taxes for a month or two while it's a good time to talk about them so we could adjust our portfolios and take advantage of any tax rules that could help us minimize our tax liability. So looking at the market, it's going to open rather flat, according to Google Finance. You know, the S&P futures really not moving much. NASDAQ, same. The one thing that did catch my attention is crude oil is down almost 2%. That's a pretty good drop. So we'll probably see oil companies drop, oil stocks drop in price. So that's interesting that went down. I'm not sure what story behind that, but oil had been around $64 a barrel a couple weeks ago. Now it's up in the 70s. I don't know if this is going to be a one-day move, but oil did drop quite a bit. That's interesting. Let's take a look at crypto real quick. So Bitcoin is at 63,657. It's a pretty good price. Bitcoin for a month, I know last month, the month of August, I had my crypto went down in value by a pretty good amount. And then this month, it looks like I regained all that value back. So it's good to see Bitcoin is kind of trading in the mid 60s, and Ethereum is trading much higher, I think, than last month. So that's a good one. We'll see where Bitcoin goes. It's a store of value right now. There's no big uncertainty other than an election, but that's not directly related to stocks. It's just who's going to have the White House and what kind of policy are we going to follow for the next 4 years, what kind of influence they're going to have over the country at large, which does have a lot of power. But I've made money no matter, which side won. So I'm treating it as it'll be good to have the election over. That way, not a lot of mind share and stress and anxiety is kind of active around the election. But no other thing is really out there that's really, I think, scaring anybody. And I think Bitcoin's probably going to run with the NASDAQ. It tends to follow the NASDAQ. If the NASDAQ does well, if technology stocks do well, Bitcoin kind of follows along, and we'll see where that goes. All right. So looks like we've got a few people on. Thanks, Mike, for joining. And let me catch up on comments, see if there's any stocks you guys want to talk about. And let's see. Something I heard about. So here's Shadow Guy. Something I heard about Serbia. If you sell a stock before 10 years, they'll take 30% of the gain. Oh, man. Okay. There's encouragement to hold for the long term, huh? That's pretty extreme. And Mike, good morning. I'll DCA my oil holdings. Yeah, I think that'd be a good idea. I think, the economy is set to slow down in the US, but the GDP data that came out in China is that China is going to grow at like 5%. That's pretty good growth. And they are going to consume a lot of oil. China does not have oil reserves. They have to import their oil, and that's going to create good demand on oil. So that wouldn't be a bad idea. And Mike is a hodler like myself on crypto. I'm not a big crypto guy, but so let's talk about lithium today. I'll try to, and Sergio, is there any lithium companies you can think of that you can suggest in the chat, or anybody can suggest in the chat that we can take a look at? Um, I would like to look at lithium. It's something that's come up over time, and I want to keep looking into it because I think materials company looks like ALB. So I've seen material companies begin to rally, and the rally looks good. The rally looks really good. Um, so is that rally going to extend to lithium, right? Lithium strategically is really important because it goes into batteries, it go into cars, go into, geez, so many things. You got like gardening equipment that now is being run on electricity, on batteries. You have all kinds of stuff running on batteries, right? So um, that lithium is a vital resource. So let's take a look at that. Maybe once I get through a couple of stocks I wanted to cover, we're going to go over lithium. Take a look at that. All right, so let's get started. Yesterday we had a boom in China. China reset their policy. As mentioned, their GDP is going to grow at 5% for 2024, high 4% in 25, high 4% in 26. Compared to the US, here we're supposed to grow 2.4% in 2024. Next year, it's going to drop something like 1.6, which isn't very, very much growth. It's just kind of slightly above being in recession. So China is going to grow much faster. It's just a fact. Part of that is that China really controlled their economy during the COVID years and really held industries back, really shut things down. I mean, really shut them down. And now COVID's over. So, hey, companies go ahead and grow. And the government's actually helping a lot of companies grow. And that's a big advantage, I think, that China stocks are going to have. So the market really responded. And one stock that came up, it actually came up on a different live stream, and a person on that live stream suggested it. And I took a peek at it, and I'm like, that might be worth looking at it further. So I wanted to bring it into our live stream. Momo is a communications company, and it's a mobile-based social and entertainment services company in China. It operates 3 segments, and it connects people. So this is, I guess you can call it kind of like a Meta, kind of like a Snapchat, and it's interesting to me. So let's take a look and see if maybe this is an opportunity, because over the last 5 years, this has been really sold off. Does it really deserve to be sold off this much, right? And over the last 5 years, in 2020, China stocks were quite popular. A lot of investors were in China. And then around 2021, it became kind of undesirable. Like, hey, investors just didn't want to be in China for a couple of reasons. I think one of them was that the Chinese government was shutting down certain companies and industries, really made the environment and operating in China quite tough. And there's also tension between the US and China, and politicians tend to scream at each other and really create an environment where, as an investor, you're not quite sure what's going to happen. But I think the geopolitical tension has eased quite a bit, and the economy in China is really doing well now. 5% growth is excellent. They're a big economy. We're not talking about small potatoes. We're talking about, this is the second biggest economy on earth. It's growing at that rate. It will eventually become bigger than the US. So these guys are an interesting industry. I like the industry, very profitable. They have a tiny market cap. This is in USD. And their revenue is 1.55 billion. Interesting. They are profitable, and they have a really low PE. Okay, you cannot get Meta anywhere near that. They are considered a buy by analysts. Interesting. A dividend. Look at that dividend. Holy smokes. I guess they're making so much money, they're going to pay a dividend. So here's what kind of shocked me a little bit is look at all this red. why is their revenue contracting? Now this is in the Chinese currency. We got to multiply these numbers times 0.14. And when I do that, we get to a revenue amount of, I think I had it here, revenue 1.55 billion. Okay. But this is kind of a concern here. Looking at the quarterly, the reduction in revenue continues. So if these guys can begin to grow, I think their valuation's really going to be positive, really high. And here's why is when I look at their balance sheet's good. And when I look at free cash flow for them, this is a quarterly. Let me change to annual. So when I look at free cash flow at 1 billion Chinese currency, I think it's a yuan, and multiplied times 0.14, we get to roughly 150 million in positive free cash flow. And if I look at 150 million free cash flow, if they begin to grow, it's really the type of company I like because their industry has really high margins, and that's very good. Excuse me, the likelihood of them growing, since China has such a big population, is really there as well. So I would value the company at like 1.5 billion currently. And if they start to grow, that might be even better, especially if they start expanding that free cash flow. Looking at the balance sheet, they have, again, this is in the Chinese currency, 6.3. That's going to be about 850 million in cash on the balance sheet. And they have about twice as much cash as they do debt. So the balance sheet's in really good shape. So this company looks interesting. Really, I'm gonna probably watch this stock and see where it goes. But as you can see, like in China, there's really interesting companies that have businesses that resemble businesses in the US. They have a massive population where a company like this can definitely have plenty of users. So this company might be worth taking a look at and getting to know, especially as if you see them begin to grow. I think this company is really going to rally, and they have a very low stock price. So that's Momo, interesting company out of China. All right, so got started there. Let's take a look at ALB. So here's ALB, and it's Albemarle Corporation develops, manufactures, markets engineered specialty chemicals worldwide. It operates 3 segments: energy storage, specialties, and Ketyen. All right, so this is right in the heart of lithium. Okay. I'm going to take a quick peek at their website. I'm not anywhere near as informed on lithium as I am with oil, so I'd like to just get a little more knowledge. So it looks like this is what they're mining or creating, and their products end up being in car batteries for backup storage for your home, and so forth. They have 9,000 employees, 1,600 patents. Their footprint, so it looks like they have, so in these locations, they do all the above. Like they have the lithium brine, they have the resource, they have the process to create the lithium. They're all over the world. Wow. in the United States, South America. Looks like they're in Chile. This might be Chile as well. They're in Europe, and they're in Middle East, Australia, and in Asia. Wow, impressive. So they are globally integrated around the world. Okay, looks good. All right, looks like a really solid company. Take a look at their investors page, see if they have a nice presentation. So this was Q2. So for the second quarter, so solid progress demonstrated by Q2 results. Q2 2024 net sales 1.4 billion. Okay. So net debt to adjusted EBITDA is 2x, which is very good. Good balance sheet. So they have a drop in revenue. It'd be good to understand where's the drop coming from. Is it a volume drop, or is it that lithium prices have dropped, and now that particular commodity, the prices dropped so much? So we'll take a look at that in their income statement. Okay, so they're looking at EBITDA. It looks like they're still profitable, which is good. So you see, I think so here's the lithium price commodity market. And it looks like the recent pricing is $12 to $15. If we were to expand to $20 or $25, then obviously the revenue would go up. So that's good. All right. So they provide really good data in this presentation, something you can really sink your teeth into, maybe spend an hour analyzing and getting to know this company. So I'm glad they provide all this good information. So lithium battery pack price. So the prices are coming down for batteries. That makes sense because as industries introduce like a product, especially around technology tends to go down in price over time. You get better technology at a lower price. So it seems to be happening in this particular market as well. But the demand is going up, which makes sense as well. Okay, so we took a look at that. I'm familiar with the company. This is an integrated company. It looks like they're really well put together. And they're in an industry that, I mean, there's going to be demand for them for at least 10 years, unless, somebody comes up with a better solution to battery power. But for the next 10 years, these guys are going to be very strategic. Their stock price, for the last year is down substantially. The revenue is 7.46 billion trailing 12 months. Market cap's 10.6 billion. They had a loss. We'll take a look at why that loss might be more of a paper loss, but we'll take a look. 4P is really, really high. Wow, that's super high. You still pay a dividend. So you see here, this is where, I think investors are concerned about this revenue drop. And what I would want to know, and I didn't get it out of that report. So let me look here. I want to know, are their volumes staying, are their volumes still really high? It's just a commodity issue. So we got net sales. So sales are down. Good news is they The selling and general and administrative costs are lower than last year for the first 6 months. They did have a capital project write off, which probably is causing that loss. And I consider that a paper loss, and it's not directly related to their business operation. Okay. Let's see if they can give us a little more detail here. So, I'd like to know volumes of sales. Are they expanding their volumes? No, that's equity. This is cash flow. Looks like they have a joint venture. Here's their debt. So I'm not getting to that answer I'm looking for. I'd have to keep digging and looking for it. Nope. So I'm going to go with one last ditch effort. Let's ask Meta AI. Let's see if Meta can handle this question. See if AI is coming to the rescue here. So ALB sales volumes isn't exactly specifically stated. You're telling me, but we can look at is some relevant figures, the idea of the company's performance. Yeah, they weren't able to get to it either. Okay. Well, good try, Meta. So I can't get to that. No, I'm sure it's somewhere. It has to be somewhere. A materials company is gonna tell its stockholders as well as the investing community our volumes were this, and they either increased or decreased. And to me, that just shows that hey, is the business is truly the product they're creating in demand. We're just dealing with a commodity price, decrease. That to me just shares that hey, they are truly expanding their volumes and they are operating well. What I would not want to see is their volumes are down, and if the volumes went down, it just means, well, why aren't you producing anymore? Are you inefficient? Are your factory's breaking down? All those things. So it looks like Mike's got a comment, which is lithium prices went to the basement and this stock tanked. Okay. Yeah, that makes sense. Now, I'm good buying material companies when they're in the basement because material prices, especially material prices like this one, where we're putting batteries into everything. I mean, it's going to be an interesting future. Like power tools, I work with power tools around the house. Man, they're so good now. I have circular saws. I've got it all power driven. I can do a little project with no cords involved. I just recharge the batteries. I'm good to go. I mean, I can go from product to product to product and show you that we've got batteries and everything. So this is going to be a high demand material. If we're dealing with a commodity price that's dropping, what are the prospects for it to rise? That's another good question for Meta. Let's ask, what is the forecast for lithium prices? See what Meta's got to say about the future of lithium prices and see, are we expecting lithium prices to rise? Let's see what Meta. Whoa, Here we go. So lithium prices are expected to fluctuate over the next few years, according to the Goldman Sachs lithium carbonate prices in China are forecasted to be so forth. They gave us a nice, somewhat table. And it looks like, let me make this a little bigger for you guys. All right. So in China, they're going to go down up until 2025, and then they're going to rise. Okay. So it's expected that we're going into 2025, prices will continue to go down, and then they're going to rise in 2026. So it might be a little early to get into lithium companies based on this forecast, double check it. But Meta's been really providing good data, by the way, on as I analyze companies. So it's become my favorite AI app as I analyze companies. And this is the reason for it is that's pretty good. That's pretty good data. And it's referencing Goldman Sachs, legitimate source. So good stuff. So it looks like the low point is going to be 2025. So we might be a quarter or two early, but we're in the right ballpark. We just got to find the right time to start investing. Dollar cost averaging into ALB might not be a bad idea. Get in a little early. Once the forecast begins to be published where, January of 2025, they're going to start comparing this 11,000 compared to 13,000. They're going to say, hey, we're going to see an increase of nearly 20% in lithium prices. And once that gets into the conversation, the stock may begin to rally. So I'm liking that forecast that, hey, we're in early, might be a quarter early, but a really good thought. So, all right. So we got to where we are with lithium prices. Now let's get back to this company. So this company, the revenues have gone down. Looks like the pricing on lithium is probably the most impactful reason why their revenues are down. Their cost of revenue is up. It looks like their volumes are probably still high. They're still providing a lot of end product to their customers. They did lose some money this year. Okay. They wrote down some assets. Interesting. Okay. So they lost some money. Now, free cash flow. Okay. So this year it's negative free cash. Last year, negative cash. Year before it was positive. So this number has to get far better for me to be a buyer. Let's take a look at it a little closer and go quarterly. See what the latest quarter, what the free cash flow for the latest quarter looks like. So 84. Yeah, these are tough numbers to stomach. So you have low commodity prices. Okay, that's probably most of the reason why you don't have free cash flows. But I got to see that number get a lot better because it's a desirable business and industry if they can generate free cash flow. So they got to prove to me that they generate free cash flow. And right now, it's not looking that way. You got negative cash in the trailing 12 months, negative cash in 23. They had a good year in 22. But even at that rate, if I use that number, I'd get to like 6 billion of value, and everything else is negative. So I wouldn't be able to use that number. I'd have to take a stab at a lower number, maybe 300 million. So I'd probably value the company, all things being, or I should say, just taking in the data points that I have, this company would be worth like 3 billion to me in my mind. If commodity prices expand, increase, and this company really starts to show, hey, we're generating free cash flow, I would be interested maybe at 5 billion valuation. But right now it seems like, man, I'm not seeing it. I think they have a bright future for volumes, but You got to be able to generate profits. There's other material companies that really generate high free cash flow, and their commodity prices are down as well. But those are beginning to rally. The one company I can think of is, because I'm a stockholder, is TX. I've seen their stock do well recently. So their stock's beginning to rally. They're a materials company, more in the steel products area. And this company here, they too have, seen commodity prices drop. The revenue growth is looking good, but I think if we look at the quarterly, well, that's good as well. So they're doing far better. I guess steel is holding up better than lithium. And these guys generate free cash flow, and they have a good balance sheet. They're headquartered in Europe. And see how they have free cash flow. So these guys they're in an industry, they're in a business where just free cash flow naturally comes out of the business. It's just coming out. And therefore they pay a nice dividend. But for me, I like the strategic location. I like the company. The dividend is the cherry on top, but the main reason I invest in TX is I like their business. I want to be in a commodity play. This is my commodity play. I'd love to find a lithium company that resembles this, because I think lithium's even more strategic than steel. Steel is necessary, needed for car manufacturing, appliance manufacturing, that kind of thing. So there is demand on this, but I think lithium is super strategic. So we looked at ALB, kind of looked at it quite closely, looked at other factors, looked at their investment page. Any other lithium companies out there you guys want to take a look at before we move on? And let me ask Google one other question. So what are peer companies? Maybe we can look at one more. So peer companies include SQM, CE, AXL. And it's a nice little write-up there. So nice. I like how, all right, Meta AI. I'm liking what I'm seeing. So it's giving me a nice little write-up of, just a quick little summary of, hey, these guys are price to sales ratio of 2x, estimated growth rate of 9.4. That looks pretty interesting. Let's take a look at that one. So SQM. I've looked at this one. Sociedad Química y Minera de Chile. And okay, so mining operation. All right, cool. Okay. So something that's throwing me off is, so operates mining worldwide. The company offers specialty plant nutrients, including, okay, so they're fertilizers. Okay. Including potassium nitrate, specialty blends, specialty fertilizers. Okay, so they're a fertilizer company. So why did Google think, or excuse me, Meta think that they were in the lithium market? So in addition, it's a fertilizer company. In addition, the company produces lithium carbonate. Okay. So it's kind of a secondary business to them. And maybe that's why the diversification around lithium, they do fertilizers, which are needed for plant growth, for growing crops and other stuff. Okay, that makes sense. All right. So good to go there. And the market cap of this company, and it's located in Chile, 11 billion, revenues 5.5 billion. They are profitable. The current P is 420. Woo-hoo. But forward P is 10. All right, cool. It's a buy according to analysts, and they're saying, hey, it's discounted. So let's take a look. Wow, big drop in revenue. Holy smokes. It looks like they probably acquired a business in 2022, and they really jumped their revenue. But they really have taken a big haircut on revenue. So cost of revenue is down. Okay. They might be reducing their capacity, their production. Like, hey, while lithium prices are down, let's not make as much of that. Let's kind of go back to our main business or our other business, which is fertilizers. Okay, so even though they have such a big drop in revenue, they're still profitable. That is impressive. That is very good. So they did not produce free cash flow, and in 2023 it was negative. But before that, it was positive for a couple of years, and it was positive in 2019. So this looks somewhat interesting. It still hasn't proven that it could produce free cash flows consistently. Not like a TX. But this one is a little more interesting than ALB. I'd venture to guess, based on the forecast we saw around lithium, these guys are probably going to be like, I don't know, $1 billion, and is this in US dollars or is this it's in US dollars. So maybe it'll be $1 billion kind of free cash flow producing company. So in my mind, it's fairly priced. It's not like you're getting a really big discount on the stock. They do pay a dividend. There's just a lot of things that are unknowns here. I'd have to have a clearer picture of how they're going to grow, how they're going to get to free cash flow being positive and staying there. So it might be a little early to get into this stock as well as ALB. So lithium, I think it's a good idea to think about materials companies, including lithium, including other materials, because it's not a matter of waiting for the economic indicators to say, oh, good news, we're done with this recession or this slowdown in the US that we expected. It's too late at that point. The market looks at everything a year in advance. So it's looking at end of 2025, what's going to happen. Okay, lithium prices are dropping. All right. So right now might be still bad climate, no momentum. The sentiment around lithium material companies is bad. But as we get into 25 and we start looking at 26, and it's like, oh, hey, lithium prices are going to start expanding. Maybe there's a new demand curve around lithium, and it drives up lithium prices sooner than it was expected. Boom. If you're there early, if anything, if you have the information, you could take advantage of a trend upward. And I think the trend, once you see these material stocks start to work, they'll work for a couple of years. So get in, have a plan like, hey, do I want to be in this for a couple of years and get out with a good gain? Or am I going to be a long-term holder? I really believe in this space for the next 10 years. So, all right. So we looked at lithium, took it for a ride, looked at a couple sources, depended on meta.ai. Okay. So thanks for asking about that, Tomas. Lithium Americas Corp. Is that another one? Let's take a look at that real quick. So LAC. So LAC is really small, 535 million. They're unprofitable. Now that we've seen two companies, it's probably those commodity prices that are getting in the way. So these guys might be pre-revenue. So selling and admin, operating expenses. So they're pre-revenue. So they haven't started generating revenue. Now, this company, if so, Lithium Americas Corporation engages in the exploration development of lithium properties in the US and Canada. It holds 100% interest in the Thacker Pass project. So these are truly mine operators, and they're extracting the materials that are needed for lithium, but they haven't started to sell their product to the market. Now, if you study their website, they're probably going to give you projections of what they're going to do. This might be interesting to follow because if you have a combination of lithium prices begin to rise in early 2025, and you have a good awareness, good knowledge of Lithium Americas Corp, this could be a really big winner. But you have to study it really closely and be in early. Make sure you really understand the company, believe that they operate really well, and believe in their management team, believe in their strategy. I like this space. I think lithium demand's here to stay. Next 10 years, it's probably going to be one of the resources that is going to be in highest demand for sure. And this might be, so this isn't exactly the type of company I'm looking to invest in because I've got a couple of things against me. It's like lithium is not second nature to me. It's more of like, okay, I have to learn quite a bit just to be able to understand a lithium company. Two, what makes a good mine operator? I don't know. I'd have to learn that too. Three, these guys don't have a track record yet. They will someday have it, but they don't. So there's just a lot of factors there that add risk. If I was really interested, I would dive into it and understand the company because it could be a really big winner, but it could also be a complete loser. It could be like you lose 90% of your investment kind of investment. It's already down quite a bit, but that's Lithium Americas Corp. It's an important space. I think we should keep talking about lithium, and especially since we're probably a little early, but at some point it's going to get really attractive. So let's keep talking about it. Thanks for the questions on lithium. All right. So let's check the chat for some more comments here. What's up, Trader Prad? Great stream last night, Trader Prad. I think you had a great stream. Nice job. And man, this market, my complaint is that it's just too smooth and it doesn't have a lot of rock and roll in it. Let's take a look at see right here, we're up slightly. Well, NASDAQ's doing quite well. No, came back down. So it's a pretty smooth market. So I'll take it. But I imagine, when we see markets drop 2%, oh man, we got really interesting things to talk about. When it goes up 4%, oh, awesome. So we talked about China yesterday. That's where a lot of the excitement was. And the American market's kind of humming along. Again, I'll take it. Year to date, I'm doing great. Last 2 years, phenomenal return. I'll take it. So we'll see where the market goes. So Omar, very nice to see you. You want to check out MT? Let's put that on the list. PT, you want to talk about CVS? Let's take a peek at that. Let me make sure I didn't miss anybody. So we talked about ALB. Meta, somebody wants to talk about Meta. I have a full video on Meta. It's probably a week old, but I would basically share with you exactly what I put in that video. I put a fair amount of time into Meta, telling you exactly why I invest in Meta. I'll comment on it, and then I encourage you to watch that video. So this is a subscriber, and I apologize. I can't pronounce your name, but I really appreciate your comment. They are researching NA accumulator. Lithium could go worthless in just one innovation. So what you're saying is that lithium could be disrupted by a different material that has better properties to storing energy, and then basically saying, hey, we don't need lithium anymore. So that is interesting. And that's why this market, right, got to know what's driving lithium. Is it really going to be a resource that's going to be a necessity for the next 10 years? Or this would be an item that if I was a lithium investor, I got to get my head around. Is there something coming that's going to completely replace lithium? If it is, then I got to stay out of the space. So thanks for the comment. All right. So, and just one more comment. So if you would like information on, or excuse me, if you want a point of view from a trader, every trading night, every night before we're going to trade the next day, Prad streams at 8 p.m. Eastern, 5 p.m. Pacific. And I think it's interesting. It's interesting to me to see a point of view on a stock. I look at it a particular way, but if he looks at it a different way, I could really understand momentum and sentiment and some factors that really could cause a stock price to change. And I could take advantage of it, either if I'm going to be an investor and buy additional shares, or if maybe I'm holding a stock and I'm going to see some type of volatility. It's interesting to see Prad kind of look at stocks there. So further English sodium ion battery. Sorry about that. Yeah, no problem. Thanks for the comments, man. It seems like you know your stuff there, and you're providing some comments. If anything, it's kind of if you're a lithium investor, run this information down, check it out, understand it yourself. Ask Meta AI. I'm not a scientist, but I'll ask Meta AI, hey, can you explain this to me? Or ask whatever AI engine you want. I like Meta because it's been giving me really good information. I've tried Gemini from Google. I've tried ChatGPT. And ChatGPT, by the way, once you ask a number of questions, it says, hey, you've run out of your free questions. You now got to pay for it. I'm like, oh, okay, but Meta AI gave me better answers than you did, and it's free. So I think I'm going to use Meta AI. Okay, so let's get back to the action. Before we jump into MT, Meta, CBS, I want to go over Visa. Visa is like a very stable, like the chart on Visa is really nice, right? Up and to the right. Very good. It's pretty much a necessity because everybody has a Visa card. Everybody uses it both in person, but mostly online. And they've really benefited from the whole e-commerce expansion. But yesterday, the DOJ said, hey, the DOJ has been calling a number of companies monopolies. And they're right about Visa being a monopoly. I mean, let's just be honest. It's a monopoly, and they have a lot of power. So they're saying we're going to label you a monopoly, and we're going to make sure that you don't use that power to stifle competition and to make it worse for the consumer. I have to agree with it. I'm a capitalist. Okay. I'm a stock investor. I'm always for business. I'm always for, if we have a prosperous economy, everybody wins. Everybody who wants to get up and go to work has a better job, makes more money, and that's all good for everybody. But let's just call it like it is, which is Visa's a monopoly. And the DOJ announced that yesterday. And I think that's what caused that, in addition to the space going down. Visa had a bad day yesterday. And it presents, the question, hey, is it a good investment? Every time I analyze Visa, it's just slightly too expensive for me. But if we look at the 5-day, this is where the DOJ said, hey, you guys are a monopoly. So it came down by 6%. For the 1 month, it's holding its stock price year to date, it's up 4.4%. It's really had adversity. Look at that. And the 1 year looks good. 5 year looks okay. And Visa is a real like reliable company. It's a big cap, 516 billion. I haven't been a Visa investor ever. It's interesting that I've never been. I'm surprised that I've never been in Visa, but part of my reasoning often that I hold back on buying Visa is that technology, like when Visa was created, it was in the 1960s. And the process to use a Visa card was all in person. It was very tangible. You had a Visa card with the numbers, sticking out a little bit, and people would run your card through this device that would basically imprint your Visa card onto a paper Visa receipt. And that was back in the day. And it just innovated because before that, people paid with cash, check. But then they said, hey, let's have this charge card concept. Let's have this. And I think they called it charge cards first, credit card later. Bank of America was the innovator. And they innovated. And then Visa itself was spun off from Bank of America. It was a huge success. Then technology comes around. We get computers everywhere. We get them connected on the internet. And now we're doing e-commerce like we're just buying everything on e-commerce now. So Visa's become a big player there. Now, from a big picture standpoint, qualitatively, I always think Visa's got a lot of risks in the future. For example, digital currencies. Why don't digital currencies just get more adoption? And Visa basically, high level, they charge 3% of a transaction. So 3%. Now, some of the biggest merchants like Amazon and Walmart, they negotiate and they're going to pay 2%, if not 1 or 1.5. And Visa has to adjust to them because they're so powerful. If they were to say, like Costco for a long time, they only accepted American Express. And I think they accept all cards now. And my wife does most of the buying for the house. But that's an example of, these big retailers or e-tailers negotiating. But there's still a percentage for the transaction that is basically all margin to Visa. They don't have to spend a whole lot of money to have this network be active, electricity and a platform. So they definitely have benefited from a network effect and network power, but I think the future may be quite treacherous for them. I could totally see Amazon saying, hey, you can pay with a Visa if you want, but if you use the Amazon digital currency, you can accumulate these credits. You can do this, you can do that. And at the end of the day, if it has Amazon in the name, consumers are comfortable with it. They'd adopt it very easily. Starbucks already does this. One of the things that I like about Starbucks, I'm a stockholder, is the Starbucks wallet. It's already an app. They've had it in phones and they have great adoption. And you can load it using your Visa. You can load it in store using cash. But at some point, and I think you can load it using direct bank connections. So then Starbucks is even better, better ahead, or more ahead, because they don't have to pay Visa. But then Starbucks is holding a balance of cash, and you see it on their balance sheet, and they get to invest that money in short-term bonds, very safe. And their customers are happy because they're buying on their Starbucks app. They get rewards. My wife loves that app, and the comfort level and the adoption is really high with the stored value wallet with Starbucks. I think that's going to continue to go up. And as that goes up, it threatens Visa. I think it's a direct threat. So we'll see how it plays out. But Visa did go down substantially yesterday. It caught my attention because it's a big cap. And this is a really stable stock, in my opinion. So we'll see what the next couple of months look like for Visa, and we'll look at, continue to keep an eye on Visa, but I'm not like, I could see like over the next 5 years. In 5 years, is Visa going to be more valuable? Potentially. In the next 5 years, is the market going to shift more to like the Starbucks wallet model? And so much of it that it's now expected that a big part of the volume on Visa is going to go away. And now the stock price is worth half as much. That's also possible. I don't know which one's going to happen in the next 5 years, but I think both are possible. And I'd rather have like an investment in a company where I feel a greater sense of confidence that, hey, this company is just going to keep getting more valuable, more powerful, more competitive over the next 5 years. And I think Visa, a lot of things are out of their control. This whole digital currency wallet kind of concept, it keeps getting bigger. And some of these institutions like Amazon, Walmart keep getting bigger, Starbucks. And they're going to want to take back some of these margins that their partners are making, like in the case of Visa, making a 1% to 3% margin. They're going to be like, you know what? If we eliminate you, we get that margin. So you know what? We're going to take the margin, and we'll see. We'll see how it goes. So that's what happened with Visa. Let's move on to the next one. So we'll start with CVS. So CVS is a healthcare company. These guys have been beaten down really bad. And I think that the company does provide a lot of value. PE is super low. Forward PE is 8. And what's interesting is when you look at their growth, very good growth. Man, so it's a growing company. They're already gigantic. They provide good cash flow. I think the cash flow has come down, but they provide very good cash flow. So you can see that historically, their cash flow has just been phenomenal. Okay. This is awesome cash flow. And the cash flow has dropped. But as we look at quarterly, let's take a look at the momentum of cash flow. The cash flow is at a run rate of roughly $10 billion. They had a bad quarter in Q4. And I think I'm not remembering what caused that negative cash flow. So this is about a $10 billion cash flow company. And historically, it's been higher than that. And a company like that, I would value easily at $100 billion. And it could be valued more because it's a healthcare company, very stable industry. Balance sheet is good. They are trying to make themselves a integrated healthcare company where they will provide healthcare services in some of the locations, like urgent care services. Hey, I need to go see a doctor. I think I'll go to the CVS, urgent care. And then a doctor can see that person and see what's going on with them, prescribe something. They want to run pharmacies, which is a very consistent, lucrative business that does really well. Very good cash generating business. And they want to be a healthcare payer, which is an insurance company where people will buy a policy with their insurance plan. I believe it's Aetna is what they acquired, and Aetna Insurance is a CVS product. I think that's very smart because historically they've been a retailer, and now they're trying to branch out and do other things within the healthcare space. I think it's really smart. The market hasn't rewarded them for that strategy, but I've observed it. And I have been surprised that the market has been this tough on CVS. And it really isn't moving a whole lot, right? So I think the stock is discounted. When it's going to start to work, I don't know. But they pay a nice dividend in the meantime. They have a solid balance sheet. I think they have a solid business. So CVS is a good stock. I believe I follow the stock. I'll show you where I think the company is priced and where they what the value of CVS is. So I think the company, and actually I missed on the debt. The debt does bring down the value quite a bit, brings it down to about 90 billion. But there's one factor that I need to update here. So one thing that Meta AI is doing really well is giving me weighted average cost of capital. It's very accurate. I've done it by hand, which is this really lengthy formula. And you have to go into the financials and stuff. This thing's been dead on. So it's kind of a shortcut that I've been taking. So CVS Healthcare's weighted average cost of capital is approximately 6.21 to 7. Okay, so we'll use 7. And cost of weighted average cost of capital has been coming down because interest rates have been coming down. All right, so this is how they guided for 2024, and I've used that number, but I think they're going to be far higher than that. I just showed you the data that historically, I mean, when I look at the numbers, it's a $10 billion free cash flow generating company. So I think they're going to grow from that low guidance up. The intrinsic value, when we add cash, take away debt, is 217 billion. Their market cap is 74,460. Shares outstanding. So it's heavily discounted. So this one here is a head scratcher. I'm like, I think healthcare for a while was not receiving a lot of capital. Even Elevance, which is a very good stock for me, was kind of seeing its stock just go sideways at best. And at some point, healthcare is going to really start to work. Let me look at one factor here, which is when we look at sectors, right? Healthcare traditionally, see this rate of return 164% over 5 years for the whole sector. So historically, and I've been an investor in healthcare for a long time, I made a very good return on United Healthcare. Thought the company was excellent, owned it for multiple years. The stock got expensive. I sold it and bought Elevance. Elevance is its competitor. Elevance is the number 2 player, but its fundamentals are just far better. And I'm glad I did so. Elevance doubles in value every 5 years. Perfect. They pay a small dividend. I don't care about the dividend. You double every 5 years, you're an A player. So healthcare is a good sector historically. Over the 1 year, it's working. But if I showed you this number a year ago, it'd be like negative. It'd be like, what the heck's going on? Why are investors not liking healthcare? It was just a riddle that I couldn't solve. Now it's beginning to work, and I think CVS is going to begin to work at some point. It's also a big sector, by the way. 8.6, that would be trillion. And compared to financials, it's close to it. Technology, I imagine, is the biggest. Yeah, 20 trillion, because it's gotten so darn expensive. So healthcare is a pretty good space to be in. I have plenty of healthcare. I owned CVS. I couldn't understand why the market was pricing it the way it was. So, I think CVS, I'm going to continue to follow CVS. And at some point I could see myself buying into it again. I think it's a good company. So those are my comments on CVS. Today, what's it doing today? It's up 1.62%. That's good. What's it doing for the month? Breaking even. Okay. What's the market doing? All right. So looks like the NASDAQ is up a little. Again, nice smooth upward trend. I'll take it. Not bad. So the 1 day looking at sectors and seeing which sectors are doing well: technology, utilities, communication services, consumer staples, industrials, real estate. Healthcare is lagging by a bit. Energy is way down. We saw that oil prices were down, so that makes sense. Consumer discretionary is down. I think there's the economic data we're seeing on the consumer is that the consumer is struggling. They're not paying their debts. They're defaulting on credit cards and on car payments. So I think that's going to be a concern for me, is the health of the consumer and unemployment. That debt delinquency is showing up in financials. Okay. So that's what's going on across the sectors, but it's kind of another uneventful day. Nothing big is happening. Might be a story here or there, but the stock market is not moving up or down a whole lot. All right. So looks like Anderson is here. Hello, sir. All hail Zuckerberg. No one will miss doing weighted average cost of capital cost. Yeah. There, it's good to do the formulas by hand or by spreadsheet, by Google Sheet. Because I'm a believer that in order to understand like the numbers, you have to do the arithmetic. If you don't do the arithmetic, with your intelligence, you don't know the number. You don't know the output. So it's good to know that the machine is going to do this. The black box is going to do this. This is the input. This is the output. This is what you get at the end. That's really important. So, all right. So let's keep going. It looks like PT Wacom at a good valuation. So I haven't heard of Wacom. Take a peek at it. All right, let's move to Meta. I'm going to do a quick flyby on Meta. And because there's a video on my channel and you can watch, it's like 15 minutes. I unassemble Meta, put it back together, look at evaluation, give you everything that I've got to give on Meta. Take a look at that video. For now, let me just take a look at its valuation. So I did the video on 9/21, which is not too long ago, just a couple of days ago. And this stock price updates automatically. So we're discounted by 36% collectively. It's a really good company and it's worked, it's been the number 2 to NVIDIA out of the big magnificent 7 stocks. But second place is not bad. If you look at, the rate of return since the recession we had, or the correction we had in 2022, it's up nicely, 528% since then. Over the past year, 89%. So go Meta. And you can see that the stock price is not gone up incredibly a whole lot. I mean, 20% is great, but in the last, I'm going to call it 8 months, it's up 20%, but the rate of return in the first couple months of the year, it just showed up big time. First couple months of the year, it was up 56%. So it was like, and it was kind of toward the end of last year, beginning of this year. So the stock's just doing great and it continues to be discounted. This is a company that, is doing a lot of things exceptionally well. I'm showing you Meta AI. That's not even priced in that stock. It hasn't been monetized, but Meta has more than 3 billion people access one of their apps each month. They're really powerful. They have the advertising business is very rewarding to advertisers. So companies want to advertise on Meta because they have great data and the advertisers get return on investment in those ads. So just a lot of positive things going on with Meta. And the AI business is not priced into the stock. Now, I can't tell you that AI businesses are going to be worth a lot or not worth very much. It's just, a way for a company to have one more impressive aspect to the experience. Most definitely Meta AI is very impressive. I've tried out Meta AI. The one that I've probably spent most time with is Gemini from Google. That's also impressive. And I've spent time with ChatGPT. And Meta is winning the contest in my mind. It has better data, has better results. And it might just be me, but I'd be curious to see at some point, some company is going to start to measure which AI platform is providing the best answers. And it's funny how consumers of data operate, right? Google search didn't advertise ever when they became number one. They became dominant because they had the best results. So I think technology will find, or I should say, the best technology will always rise to the top because consumers of information will do what I did, which is compare the different sources and then boom, here we go. So Perplexity is the best chat bot. All right, Scion Ken, we're going to challenge your comment there in a positive way, of course. So we're talking about Perplexity. Perplexity AI. Okay. Okay, so Perplexity AI and Grok. I heard Grok was good too. I haven't looked at Grok, so let's just deal with Perplexity here. Where knowledge begins. All right, cool. So we just asked that question of Meta AI. So so it gave me the instructions. This is what Gemini gave me. But is it going to give me an answer? So when I asked this question of, and I did a video on this, I asked the same question to Gemini from Google, ChatGPT, Meta AI. This isn't innovation. I could have done a Google search and it would have given, and I'm not going to do that because I think you guys will believe me. If I did a Google search, it gives me exactly what this is. Okay. So that's not like moving the needle. It gives me the formula. Okay, perfect. That's what I would get in a Google search. I would get this in a textbook, by the way. When I was in college, a long time ago, we did this. We did this by hand with calculators, of course, but you had to understand the logic. But I don't see where they're answering the question. I asked for the number and it gave me the instructions. So, okay, so it's not as good as Meta AI yet. It's as good as Gemini and as good as ChatGPT. I'm going to ask it a harder question. This is a hard question. So, okay. What is the intrinsic value of CVS stock using discounted free cash flow forecast? I asked this question of Gemini, ChatGPT, Meta AI, and based on the search results, so it's taking me to Alpha Spread, which is a very good website, by the way. I've used it, and it's referring to what they think the intrinsic value is. Net Guru's Focus, which is a big website. Yahoo Finance, which is a website. But it didn't do the calculation. The only AI engine that did the calculation, which is a hard one, that is very involved. You can see the model here that I do, right? This is probably 4 to 5 calculations that lead you to this number, right? The only website that did the calculation was Meta AI. The problem with their calculation was it was a good calculation. Mechanically, it was correct, but the data was a year old. So the number was a year old, which is like, hey, that's way in the rearview mirror. I can't use it, but A for effort. You did, the logic you used was all correct. And you did go further than, at this point, Perplexity. It went further than Gemini, and it went further than ChatGPT. So thanks for suggesting it. It looks like this is a good site. Not saying it's bad, but I'm just saying it's equivalent to Gemini and it's equivalent to ChatGPT. So the one thing I would put out there is that I've never heard of these guys, but I'm going to guess that their balance sheet doesn't have, the billions of dollars that Meta has. How much cash? They have $58 billion of cash on the balance sheet. So they have a few dollars to spend on their Meta AI app and make it even better. And so at this point, Meta AI is still the one that's ahead of the pack for me. I appreciate you bringing up that suggestion, Seon Ken, and hopefully, keep bringing it up. If you see innovations in that site, cool. So you can ask Perplexity to calculate it themselves. All right, so let's go back to Perplexity. Maybe I didn't ask it correctly. The way I asked was, what is the weighted average cost of capital for CVS stock? Okay. So I don't think I asked it wrong, right? Okay, let's ask, what is the actual? So what is the actual weighted average cost of capital for CVS stock? Maybe the word actual is going to make a difference. Here we go. Again, it's referring to alpha spread. And now it's asking me to sign in. No big deal. That's the same thing as Meta. I do have a Meta account. So it's referring to other sites. Okay. So it's not doing the calculation. Okay. Artificial intelligence is supposed to do what I do for me, right? I already know of alpha spread. So I did do a good job of reminding me, hey, you can go to alpha spread and they'll tell you what they think the weighted average cost of capital is. And you can go to value investing IO. I already knew that too. And you can look for it. Okay, cool. But it's not doing the calculation. Meta AI is doing the calculation. See how it starts? The weighted average cost of capital is approximately 6.12 to 7. It answered the question. It did the arithmetic for me. So that is better in my mind. That is game changing in my mind because it made my job easier to value a company. Now, when I go to this outcome, I have to go legitimize alpha spread and make sure that I understand that they did it right. And I have to go. And by the way, this is a good site. I'm not saying that's a bad site, but I think this site's going to go away if Meta AI and other AI engines continue to get better. Guru Focus, good website. You have to pay to get data out of that. And this does have also a paid service. So again, it proved that these guys are a good AI engine, but they're not going as far as Meta AI, in my opinion. So interesting stream of thought. Appreciate you. All right. And I'll look at Grok on some other occasion. So we got a couple of stocks to go and then we'll wrap it up. So we'll go to MT. So ArcelorMittal together with its subs acts as an integrated steel and mining company in the US, Europe, internationally. It offers semi-finished flat products. Okay, cool. This is a lot like TX. Okay, cool. A lot of employees, pretty big operation. $20 billion company. They lost a little money. Okay. Forward P is only 7. They pay a 2% dividend, saying it's a buy, 21% discounted. So when we go look at their financials, steel prices are down. So steel prices are down. That's consistent with TX. So not a big surprise there. They have net income in their last full year, but the trailing 12 months are losing a little money, not a lot. Free cash flow is very positive in the full year. Looks like they're having a dip in free cash flow, but historically, very good cash flow generating company. I'd probably use like a $2 billion number just to say how valuable is this company? And they'd be worth about 20 billion, which is where they're being priced at. So this one's being priced fairly. If commodity prices rise, their revenues are going to rise, their free cash flows are going to rise. So if you have a sense that, hey, commodity prices are going to rise, not a bad stock to be looking at. It's been working for the last month. It's pretty much gone down year to date. Over the 1 year, it's pretty much even. So this seems to be a good company. Let's make sure that the debt is not too bad. So we've got balance sheet of looks like 5.8 billion in this US dollar. Yep, 5.8 billion. And then debt is total debt 11.1 billion. Okay, so 11.1. So they're net about a little over 5 billion. Not a lot of debt because I bet you their EBITDA is a good chunky number. So EBITDA is 4.55. So they can pay off their debts and call it a year and a half. So very good balance sheet. So good balance sheet. Seems like it's a good stock. It's if we're at a low point in commodity prices for steel and they start to rise, this is going to work. This company is going to work if steel prices rise and economies, especially I'd study what are their main the markets that they serve. If they're serving China, we just got a GDP report forecast that China is going to start growing much faster, right? So if these guys, if you study their financials and they're like, yeah, we sell most of our steel to China, you're like, well, that's good news. China is really going to grow. So these guys are probably going to take off. So I'd study that. I'd study where's your steel ending up. Like with TX, they operate in Mexico, Brazil, Argentina, maybe a couple other places, but that's probably 90% of their volumes. Most of their volumes are in Mexico serving the US market. So I like that. Strategically, I like that. Their end market is the US. Rolled steel, which goes into cars, appliances, other products, even computers, for the server racks and so forth. So I would say that'd be the homework on this stock. But it looks like fundamentally it's a good company. So good luck with that. Okay. Right. So next one is going to be Wacom. So Wacom. So got a couple of choices here. So this is an over-the-counter stock. So it's a tech company selling pen tablets and related software. Okay, really small company. Pretty much 1-to-1 revenue to market cap. So where are these guys located? So it looks like they're Japan. Okay. That's over the counter. And I've run into multiple stocks in Japan that are over the counter. Probably the most notable one is Nintendo. You have to buy over the counter, and then there's some fees that I would have had to have paid in the Nintendo stock. It would have been worth it, but it kind of scared me off because I'm like, if it's hard to buy into the stock, it's going to be really hard to sell it. So that's one of the hesitations I have on stocks like these is if it's hard to get into them, it's going to be really hard to get out because investors that are looking to buy that stock are probably not going to want to. There isn't going to be as many that want to buy it. Okay, so these guys, 1 year, year to date. Okay, so it's a small company. The revenues are expanding, looks good. Okay, and then we've got free cash flows look good. And this is this in yen? Yeah, it's in Japanese yen. So we'd have to convert that. I'm going to keep it light on this one. I think it's interesting, especially with their growth in cash flows. It's a super small cap, right? And it's over the counter. The things I would caution is this is a stock that may work, may not work, but it's just not going to be very marketable to the U.S. investor because it's small, it's over the counter, it's in Japan. There's just a lot of things going against it. All the data is probably going to be provided really for the Japanese investor. If you have very good knowledge of the company and really believe in the company, that would be a very good reason to invest in them. But to the average investor like myself, I just wouldn't invest in it because it's just too far outside my domain expertise to really buy into it. But it is an interesting company. Japan has been doing really well. I know the Japanese stock has done really well over the last couple of years. And that's following a time when the Japanese market was terrible for a long time. But for the last couple of years, Japan's just been really doing well. So good luck with Wacom. All right. So Shadow Guy. Your broker may allow you to buy foreign stock on foreign exchange. Like, I think it's Interactive Brokers. It's easy. So the short answer is yes, I could have bought the stock, but I had to pay like a $50 transaction fee. And I'm like, $50. Okay. So I guess every time I'd buy shares, I'd have to pay $50. I'm like, okay, that's prohibitive. And that was the big problem with me is like, well, if I'm gonna have to pay $50 per transaction, that makes it less marketable to me. And when I go to sell it, the US investor is going to be reluctant to buy it. So again, if I'm not comfortable in a stock, if I'm not understanding a stock, if I don't get it, I don't buy it. There's thousands of stocks to pick from. And I probably missed on the Japanese rally, and that's the price I paid. But I got to stick to a process that works for me. In the case of Nintendo, for me, I like Nintendo. I've used their products for a long time. I think the company's great. If you study their history, super interesting. It's like they did not start in electronics and gaming. They actually started in an industry that has nothing to do with where they're at today. But I happen to think that Nintendo is a very good company, providing great products. So that's why I was interested in the company. I'm like, hey, I'd like to be in Nintendo. And it just was not desirable from a transaction perspective. So I decided not to get into it. So that was my story on Nintendo. All right. So we covered a lot of ground. We went deep. We went deep on a couple of thought patterns, lithium being one. I'm glad we did so. Lithium stocks have come up a few times. And I think the conclusion is that lithium prices are way down. It seemed like one of the comments that was out there was lithium may be replaced by a new material that is going to do a better job of storing power. That'd be a story worth following if you're going to be a lithium investor, because obviously that would completely disrupt the space and can really cause big losses. And it might be a space worth looking into, the new space. And we went across a couple other stocks. Really, really good session. Everybody, good luck today. What's going on with the stock market? What is going on? We're still smooth, man. Jeez. No storms on the horizon that I see. And it looks like we're going to have a smooth day again. Not a bad thing, a good thing. All right. And just a reminder, we've got a couple new paid members. I appreciate that very much. I'd like to grow the community, and I really appreciate if you become a paid member. There's a link on the description of this live stream where you can get to the membership page. It's $10 a month, and I'd appreciate if you could become a member. Probably this weekend, I'm going to publish the new membership plans and kind of like the benefits that each plan is going to have. $10 is going to be the base plan, and then there's going to be 2 other plans that are more expensive. Any current member at the base price is always going to receive the highest level of call it service or benefits. And that's just going to be a reward for the early supporters of the channel. So everybody is a member. Thank you so much. And you'll always be protected there. I'll have a list of all those members, and I'll have a kind of a cutoff date of before this date. It's probably going to be October 15th. If you become a member, great. You're kind of protected. After that date, people that buy into a plan will have the benefits that they buy into. So thanks again to everybody who subscribed. I really appreciate it. And thanks to everybody who attended today. Really good session. Again, it's a smooth week. And let's get back together tomorrow, same time, see how the market's doing, and see if we're going to just keep going slightly up and to the right. I'm okay with that. I'm okay with the gains in the month of September. And we'll bank it and move on to October once this month is over. So everybody, enjoy your Wednesday. Thanks again for tuning in.